You can hear me?
Yeah, loud and clear. Can you hear me?
Yeah, I can hear you. All right. You see my screen, right?
Yeah.
All right, bro. This right here, bro. If you ever want to back test a strategy, this right here, Soft4FX.
Hold on. Let me
This
check.
is a simulator. It's a Forex simulator. So what it does is it treats like previous market data as if it was like live, right?
Yeah.
So it's pretty lit. It's pretty lit. So, anyways, I'm gonna get into it. I'm recording it for Javion. What do you want our starting balance to be? We're gonna trade like an account. I put this is so we're gonna be trading the month of June, which is last month, around like the same time. So like the second weekend, we're gonna be trading like just 1 week, and I'll show you like kind of like how I execute in the markets. This is GBP JPY. I'll explain how the chart time kind of works later on, like in the simulator. But yeah, our leverage is going to be 1 to 100. It can honestly be lower than that because like I don't over leverage, but we're just going to keep it at that. And what do you want our starting balance to be?
Let's do a grand, 1,000.
All right, sounds good. All right, so we'll see what we can work up 1,000 to at the end of the week. So start simulation, and then I'm just gonna do a bunch of stuff to kind of like get it set up. All right, so what I pretty much did was load up all the time frames. You kind of this is MetaTrader 4. This is the MetaTrader 4 platform. I'm sure you can see right off the bat like why TradingView is so much better because it's really made for like algos and just like making like computer trading plans and stuff like that, at least in my opinion, because like the charting on here, like doing technical analysis on here is ass. All you do on here, for me at least, all I do on here is just execute. But for the sake of this, obviously recording, we have to chart on here. So this is the weekly time frame for GBP JPY. I don't have all the data loaded up just the past 150 days, so we're just going to go off of that. Obviously, we can't see all the major key levels, but we're just going to draw some levels here. As you can see here, there was some support previously there. You can see there was some resistance up here. If we go down here, you can see there was some support, and then there was previous resistance at this level, right? So this is all of our major levels that we can draw up and bring down to the lower time frame. So we're going to go on the daily now, and we see that in a bigger, more clear picture. And if you look to the left, remember, price is always looking to the left. So we have a clean range. If price were to move up, we have this clean range because the last time price was in this area let me start doing this. The last time price was in this area, you can see there was a clean candle, right?
Right.
So that means that price should have an easy time moving up because the next you can't see it way over here, but I'm sure because we drew this line here that there's some previous support right here. So if price were to keep going up, we can see it coming to this red line here. But we would obviously have to get confirmations from the lower time frames. So this is the daily where price is at right now. I can't say that I would draw any extra levels. It's just continuously going up. So my bias would probably be buy at this time. If we go to the H4, you can see, there's a previous level of support right here. This is like the lowest level of support that was made currently. And then there was some resistance here that retested as support. You can see that clear, like this was a halting point for price. It made a little support to kind of like come down and break through, and then it retested and it continued, right? So this is the key. This is our latest key area right here. Does that make sense?
Yeah.
All right. So now if we go to the H1, actually, wait, sorry. Should have copied those levels over. And let's show news on all these. So I also have another thing that's very crucial when it comes to trading. I don't think I really talked to you guys about it, but forexfactory.com. It shows you when all the news releases happen. I just activated. You see how the news up here is orange. That means that if there's news, there will be a vertical line in the chart kind of like this. It'll just have a vertical line with the timestamp at the bottom, and it'll show like if there's news. So now that I have that activated, I go to the daily. Maybe you'll see it. Yeah, you see these two lines?
These two lines that popped up right there.
Yeah, those were news events. So
Okay.
I guess like this week that we're trading ahead doesn't have much news. So I mean that's always a good thing. I mean, you want to stay away from news. So since there's no vertical lines to the right here, that means that we're probably gonna have an easy breezy week as far as like price action doing what it's supposed to do, and news won't like fuck anything up. But this is June once again, so it's like obviously our current market conditions are coronavirus, so there's like a lot of pop-up news shit that just happens that's not planned on the charts, you know. So anyways, this is the 1 hour. You can see those H4 levels that we drew up right here. This is them on the 1 hour. You can see that price was bouncing around inside of this range before it finally broke out, and then that retest happened that I was talking about continued to go up. So I mean, if we really wanted to draw like more levels on this time frame, we could say that this was our most recent support, right? And then we can say that this was previous resistance that with price coming down right now could possibly get retested as support, right? So let's just copy those levels and go down to the 30-minute, which is where I execute personally. I mean, you can execute on any chart, I mean, on any time frame, but me personally, like my comfort level, the 30-minute is where I get like the most, like it's the best balance between quantity and quality. So yeah, 30-minute confirmations are what I'm looking for. Anyways, we're gonna speed this up here. You see this time right here, the 00, and then 0603.
Yeah.
This is like GMT time. So me, I trade London session, which is at 10 on this. And then this reads day, month, year. So we're on June the 8th of 2020. Does that make sense?
Yeah.
And it's a Monday. So what does that mean? On Mondays, I'm taking low risk and, you know, I'm just chilling. I usually want to see which way the market is trying to push on a Monday. So this is pre-New York, 9 o'clock here, but, well, it's 2 a.m. Eastern time. So this is when I'm waking up, right? And what this simulator is going to do is I'm going to make it speed up here, 79 ticks per second. So you can see like we're already 2 minutes into this current candle right here on the 30-minute time frame. So that's how the simulator works. It makes the previous chart data as if it was moving like a real chart, right? So you see this current candle, it pushed down first and it made a lower wick. And it's respecting the previous candle's low, like it's still bouncing from there. So there's a good, there might be a chance that price is moving up. I'm not really anticipating this range right here because that's not clean price action to me. I'm waiting for a breakout to happen. So you know, we're already 40 minutes into pre-London, and price is moving down here. I would want to see a break outside of this level right here in order to execute a trade. And of course I would have to have like some sort of like comfy stop loss. So yeah, this is New York open. You can see it's 10, well, really 3 a.m. So this is New York open. This is when a lot of volume enters the market, right? So usually, you know, you always want to look at your higher time frames as candles close. You know, that way it's kind of like looking in the rearview mirror when you're driving. You know, you just want to be safe. Right. So the previous daily was bullish. The current H4 is bearish, and it made a lower low in comparison to the previous H4, which also didn't have much volume, right? If you're looking at these candles, they're big candles. Well, not a big candle, but it had a nice wick right here. And then you look at this candle, and it's like the momentum's dying out, right?
Right.
And then if you look at, I don't know if you trade like candlestick formations, but it looks like this could be an evening star. Like, you know how you have that candle and then the doji
Right.
and then the big candle going down. So it looks like price could possibly start falling down now. But we'll obviously we go to the lower time frames to play that out. So overall bullish, but if you look at this H1, this is strong bearish. That candle just closed. So pre-London, you can see that it had a strong bearish candle that ate up this previous H1 candle, right? So this is, if you're looking at candlestick patterns, this is called a bearish engulfing pattern with what's going on with these two. I don't use candlestick patterns. They're valid, but it just doesn't help me execute. But I'm just kind of like going through all different things and all different trading styles kind of. So yeah. Anyways, like I said, I would want to see a break underneath this previous level of support. And we'll see what happens. So obviously, like what I would want ideally is a breakout and then a retest and then a continuation downward, because if you look to the left here, if price does start coming down, you see this area right here. Like I said, price is always looking to the left, and this is a clean move up. There was no problems with price moving up here. So that means that once price comes back down here, if it does start to break down, it shouldn't have a problem going down. Now that's ideally, and the probabilities are higher that that will happen rather than it not. And as you can see right now, obviously there's no confirmations here because price is respecting, this level as of right now. And let me just slow things down here. So you can see this current candle doesn't have a wick at the bottom. So this could be a London Open false move. Me trading London Open, I kind of know how it moves. There's a lot of times where it'll just drive up, get a lot of liquidity, and then go where it really wants to go. Now, that doesn't mean that, this can't keep moving back up. The market does what it wants to do, but you always have to anticipate moves and understand both sides of them. So the reason why, this would have been a successful move up had we seen that price was rejecting this support area with this candle right here, this one right here. But the reason why I wouldn't have got in on a buy, like right here, like when the candle closed, is because it didn't close above the previous candle's high. If it made more of a close like up here, and left a little wick, then I'd be like, oh, okay, this is a valid buying opportunity, right? Because then it ate up the previous candle's sell, and obviously our higher time frames are saying buys, like as far as like our daily, and this when we look back at like the let me delete that, but when we go back to like the H4, then you see how it's starting to flip bullish now.
Yeah.
Like we can have that idea that, okay, maybe this is a liquidity grab to keep going up, right? So I would have that idea had this candle close above, but it didn't. So we're just going to keep going. And me personally, I'm thinking this might be like a liquidity wick to push us down, because like I said, price usually pushes in the direction it doesn't want to go first, and then starts coming in the direction it really wants to go. So you can see that's kind of happening now. With that big bullish candle, it might have gotten a lot of traders to say, oh yeah, we're in buys. And then this is what's really happening, right? So that's a little scary, right? So this candle's about to close, and I like how, this, I don't necessarily like how this candle closed, because obviously it's still respecting support. It's still closed above support, right?
Mm-hmm.
But this is it did a nice liquidity grab. So this next candle could just break out of here, right? So we'll see what happens. It's a Monday. I usually don't like to rush into things too quick, but all I'm doing is anticipating,
Right. I got a question.
Yeah, go ahead. Should I pause the chart here?
Pause it for a second, right?
Yeah, go ahead.
you're able to look at the chart and see by zooming, you're setting up your support. And when you set up your support and resistance, you usually just set it up within the sections, just like that. How you're setting it up now every single time. And
Yeah, so
like
pretty much like,
that, those squares, those are basically your
yeah,
support.
I'm using the rectangle tool on Trading View in order to draw these squares, these
Right.
zones. And the way I usually draw them, you can see the reason why I drew it like this on this circumstance is because this body right here,
Yeah.
and then kind of like this wick over here.
Right.
So like I'm trying to make like an amends to where both meet, and like just making, because you never want to make an exact line, because then like obviously like it could like not be met. But
But
it's
that's
just,
area.
everything's always a zone. Yeah,
Right.
yeah. But yeah, that's what I'm using. I'm using the rectangle tool on Trading View in order to just make a zone, and then like obviously like if price was like right here and everything to the left, I wouldn't see this zone yet. But once price comes down and then makes this move, I'm like, okay, so price bounced off of this area. It must be pretty key. And then I look to the left and I say, oh wow, there's a wick right here. Maybe this is a zone where price like does some action, right? Because previously it bounced off of here and went down, and now it's bouncing off of here and going up. So that's how I draw those zones. It could either be like one going both ways, or like multiple times it going off of it one way, you know? So yeah, that's how I draw the zones. Does that make sense?
Yeah, it definitely does.
All right, cool. So yeah, we'll keep going with this current candle. It hasn't closed, so we can't say it's respecting support. But like if it were to, well, now it looks like it's gonna close bullish. We only have like 10 minutes left, but we'll see what happens. All right. So this right here. Now I would anticipate something light. Now you see how this current candle is pushing down first.
Yeah.
It's creating a lower, to me. If my bias is buys, right? I'm looking at the H4 and I'm saying this could possibly be like a bottom wick to push up, and I'm looking at the H1, and well, I mean that doesn't look pretty on the H1, and if I'm being real, but I mean obviously we have like 25 minutes left in this hour. We could have the possibility of coming up and breaking this previous high that was created, but I'm just trying to see if we can execute some trades here on the simulation. But if this candle respects, like let's say what it's doing right now, if it's respecting this candle's low and it's rinsing down first and then it rinses back up, I would probably execute right here, because this I execute on buys right here and then put my stop loss below here, because you see how this candle closed above this candle.
All right.
It closed above this candle's high. Like, well, not the high, but this candle's open. So that's like kind of like a bullish engulfing move,
All right.
So I mean, there's a good chance that obviously we've had 4 candles and they've all yet to break this support. So potentially you could look for a buy here, but at the same time, if this candle disrespects this candle's low and keeps going down, then I would look for a sell.
Okay.
And right now we're pretty much, yeah. So all right, so let me take my words back here, because the time, so if you look at the time, this is actually about to be 5 o'clock in the morning, which is the close, and this is another thing you have to look at, which is the close of the 4-hour candle. I usually try to stay away from the market 15 minutes before and 15 minutes after a 4-hour candle is going to close, because then a lot of dirty work happens, right? Like because then the 4-hour closes, and I'll show you here. The 4-hour, this candle right here is about to close, and then the next candle opens, and usually you get a hard push, like no matter which way, you know, like it does what it wants. And right here you see, well, I mean, that's probably really big on the lower time. Well, not that big, but anyways, like it'll have a hard push because it's trying to create that wick on the 4-hour now. But you see, this looks nice for sales because this wick came down below this previous 4 hours wick, and it respected the previous high, right? So I like how the 4-hour closed in order to like kind of like look for sales on this next candle here. But yeah, let's see what we can. Let's see if we can make something happen on a Monday. And obviously, like if I'm drawing zones here, like obviously this is like resistance, and we're kind of like we're trapped in this range. Like nothing's really happening. We're just being patient as price bounces around in here, and we're waiting for either a breakdown or we can have a break up and a retest and continuation. So this is where patience kind of just comes in. This happens a lot.
Yeah, yo, the patience part gets crazy.
Yes, sir. Gotta have that discipline. But what was it?
The patience part gets confusing sometimes because if you get caught in the middle of a retracement.
Yeah, exactly. You never want to have that happen. But as you can see, if we go up to our 4-hour candle, you see it's making a new lower low. So now I'm really confident for sells. Because if this candle has made a lower low than the previous one, there's a good chance that it's going to continue coming down. And this this 4-hour candle was in between, you know, like a period of no volume and volume. This could be where the volume is kind of kicking in because this is during London session. This 4-hour candle is during London session. So yeah, this move could be playing out here, but you see how it's breaking down now. Where would my stop be? I mean, it would probably be like above this candle, but I'm just gonna be patient here because I wanna wait until this candle closes.
Right.
Because you see, if we look at the 1 hour, this is what the 1 hour is looking like. There's only 10 minutes left. There's a good there's a possibility that, you know, this could be the push down, and then like if we were to enter here, we'll become the wick because it rinses back up to make that range wick that we're looking for, right?
Right.
Yeah. So even though the 30 minutes breaking out, you still want to see how it closes because this candle could easily rinse back up and then still be respecting support. So we want to see how this one closes. And then there you have it. Like it's breaking out. So this is our breakout candle. I call this my gladiator candle because it's done something that no other candle was able to do. You see the body, how it closed? It closed somewhere, like the actual body of it closed somewhere where price hasn't been able to actually close since this.
Right.
So what does that mean? That means that we're in action on this down play. This downwards move, we're in action on it, and we're looking to the left, and we see this clear range, and we're anticipating sells. Now, we could take a low risk. Like I said, it's Monday. You know, you want to keep your risk low, but it makes sense. I mean, if we were to go ahead and sell this right now, I would put my stop loss above this current candle. So and the market was moving crazy. So, I mean, 23 pips was really nothing, but this will be a 23 pip stop loss and I'm risking 1%, right? So I'm clicking sell and you can see I'm activated in this order. And like my stop loss is this red line here. So that's kind of like how the what do you call it? The simulator works. And this is my little trade box, so you can see like how many pips in profit or loss I am. And you see now another thing is this this is kind of like where, okay, all right, right here. You see how that wick, it's really small, but it still came into an area, you see to the left here, where it kind of like, this is like the area where price is rejecting off of and making a big move.
Right, so that's almost like
even though, yeah, so this could be our little retest, and it's still, like I said, it's respecting this candle's high, so it makes sense. Now, this is stacking your trades, and you only do this like when you see it happen a lot. Like me, I know that there's a really high probability when there's clean candles to the left that the move that's about to come up is going to be really clean. So so now the way I'm anticipating this stack is once this like you see, this is the same thing I keep saying over and over, but you see this candle's low.
Yeah.
If it gets broken by this candle, you can expect for price to really start to push down. Right?
Yeah.
So once I see that, which is, all right, I mean, pretty much, I mean, a little second ago, but well, I really should have already executed, but this is going to be me stacking my trade. And I'm going to put this stop loss above the current candle because I don't expect for price to come back and flip bullish on me, because this is a clean move to the left. I can expect a clean move to the right, right?
Right.
So what we're doing now is we're placing a second sell, and I'm executed right here in the market. And you can see our first sell is already 16 pips in profit. What I like to do is whatever my stop loss is, so let's say it's in this case it's 23. I target 23 pips, and then I close half of my position. Okay. So I mean, this is moving pretty fast here, but I mean, once it gets to 23, yeah, right here. So this is where I'm closing 50% of my position. So I'm closing half of it, and I'm moving my stop loss to break even. Oh shit, wrong trade. Give me one sec. All right, this one is up here, and I'm moving the stop loss on this one to break even. So you see, now this is a risk-free trade. If price comes up to this position,
right,
then I don't lose anything on that particular trade, right?
Okay.
So let's keep it going. It looks like price is doing its thing, and that's how you catch those moves, man. You just draw support, resistance. You use some. All right, so here, all right, let me wait up. Hold up. So this stop loss, you see, is 24 pips. You see that?
Yeah.
And we're at 25 pips on this one. So I'm gonna close 50% on this trade as well, and I'm gonna move my stop loss to break even. And just like that, I mean, like, we caught a fucking easy move. It all made sense. It was easy. You know, we drew our support, and we made sense from the higher time frames. We made sense of why we'll take that second entry, and we made sense of why there was going to be a big move to the right, because there was a big move to the left. Now, this doesn't happen all the time, and it doesn't happen all the time this quick either, but the probability of it playing out is very high. So we're just going to keep this going. Now my next target area, obviously, is this area right here. So this is where price halted, and we could probably see it do the same thing once we get to there. So I'm leaving my my position at break even. I'm letting price do its thing. I'm already grateful for what I've gotten. Making 1% on a Monday is great. Now, I don't think I pointed this out to you yet, but this is where we're currently at and our percentage gain. So it moves as the market moves. You can see that. Yeah. But right now, if we close out all of our positions, we'll be up 2%, which is great for a Monday, man. Can't complain about 2% on a Monday. That's amazing. Like, if I was trading like my live account at this point, like, I'd be humble and just take the 2%, and I'll be all right. But you can see, like, now this is where you can, like, kind of read candles and be like, okay, we're having we're stalling at this area. Obviously, price is moving, like, obviously quicker than like regular because it's a simulator and 1 minute is like 1 second.
Right.
But yeah, we're stalling at this area now. So, I mean, this is what I would do. This is what I would do at this level. So I'm going to modify my stop loss and bring it into profits now. So this one I'm going to bring down here. And then, and I'm just giving that room to breathe. That's why I brought it right there, right? And then this other one right here, I'm going to bring, oh, someone's showing off. But I'm going to bring this stop loss right here. I'm going to bring it above this candle because this current candle that we're on right now, it should do what?
It could possibly go back in and test that stop loss.
Yeah, like it should, like right. So if price were to come up and hit the reason why the stop loss is there is because I don't expect, if we're still going down, I don't expect this candle's high to be broken. If it's broken, then we're probably going to keep going back up, right?
Right, essentially.
Yeah. So that's why my stop loss is there on that one. So we'll see what happens, and you can see it's getting tested. It's gotten broken, but you see that's why I kind of keep like a little bit of space because sometimes that happens, and then price keeps going down in your favor. So always leave a little room for breathing. But I mean, in this case, yeah, it's getting broken up, and there you go. I'm out of the trade, and for a Monday, making 1.73%, that's not bad, you know.
How much would that be in profit? How much would that literally be?
So on a $1,000 account, and this is using 1% on a like when I used to compound small accounts, I would risk like anywhere from 5 to 10%. But on that on that trade idea, we risk about, well, I mean, it was quickly, but it was risking 2%. And then closing half, which you can always close more than half. But the trade idea was valid. When we go into Tuesday and Wednesday and Thursday, that's where we're going to risk a little bit more than just 1%. But our idea was right. And, you know, at the end of the day, I mean, it's $17 on a $1,000 account, but that's risking 1%. You can always, if we were to risk 5% or 10%, then you can just multiply that by 5 or 10. Right. But obviously your idea has to be really good. And if price goes against you, then you have to keep your losses small, man. Like, yeah, you're risking 10%, but realistically, if you're not feeling it or price isn't doing exactly what you want it to do, then start closing partials and make that 10% 2%, you know?
Right.
So like I said, risk management is very personal. If I'm trading a large account, yeah, I'm staying to the risk management rules, which is, you know, 1 to 2%. I'm sorry, 1 to 3%. And definitely staying below 5% no matter what. But like if you're scaling a smaller account, then yeah, I mean you can break those rules a little bit because it's not like, for instance, like a hedge fund or a prop firm, they're putting millions and millions and millions of dollars on the table. So risking 5% is like insane, you know.
Right.
Or risking 10% in one trade, that's ridiculous. Like they'll laugh at you and say, "Yeah, you're not going to trade here ever again, buddy." But yeah, all right. Anyways, let's get into this here, kind of like why I drew the fibs right now. Because all right, if you look at the time, 1500 is New York Open. I don't know if I told you this before, but a lot of times what happens during New York Open is the London move is repeated. So yeah, I got stopped out, but this could be a minor pullback, and you see my fibs. It's respecting the 38.2 right now. We'll see where this candle closes. This is the 30-minute time frame. But yeah, we have about about 20 minutes, 23 minutes until this New York Open happens. And this New York Open could possibly like keep going down, right? So we're gonna keep playing out sells, even though that was a strong buy candle right there, and we're just gonna see how it reacts to these fib levels. The 38.2 is a strong rejection. That means that there's probably going to be a strong move following it. The 50 and the 61.8, that means that there should at least be a retest to the previous high or low that was created. So right here, and you can see this candle right now is kind of like, it's kind of rejecting the 38.2. I want to see it close bearish. All right, yeah, there we go. So even though that was a really small candle, flipping, closing bearish, I would want to anticipate, like, this is where we risk profits, right? So let's just say we're risking 1% again. Fuck it. Because I'm just gonna risk some of my profits earlier in the day to make more profits. So let's say I have this idea that if this candle's body, this candle's wick is broken to the downside, then I can anticipate with the New York open volume for it to keep going down, right?
Okay.
Okay. So that's kind of like what I'm looking at. And it's a 38.2 rejection. So I'm glad that it's making a top wick right now. It's still rejecting that area. I want to see a top wick. And then let's see if it, I want to make sure I don't miss it. Sometimes these things just fucking take off. All right, there we go. All right, so this is it. And I like how it has a top wick. So you know what? Let's risk. How much percentage you want to risk?
5%.
5%? All right. So we're risking 5% on this trade. And this candle hasn't closed yet. So, I mean, and it's a really small, like 11 pips. Compared to this big move, 11 pips is nothing. So I'm going to put the stop loss above the previous candle. So that's like 17 pips. And we're going to risk 5%. And we're targeting this previous low. That's where we're going to start taking profit. So we'll see what happens. So this is anticipating, even though that candle was small, this is anticipating that New York open's volume is going to push the market down. So you can see, like, there was a bit of a stall right here. This is the 15-minute time frame. Let me copy the fibs over now. So you can see, if I get this out the way at least, you can see it's still respecting that 38.2, and the current 15-minute candle, the first 15-minute of the New York Open, was a strong bearish candle that, you know, it made a lower low than the previous ones, right? So we can expect some continuation here. And even though this candle is coming up right now and we're in drawdown, it's fine for me as long as the candle doesn't get broken, like this high doesn't get broken, right?
All right.
So we'll see what happens. I'm fine that it's rinsing up. And at this point, I'm really confident, man, because it rinsed up first, and then now it's coming back down, and it looks like it's gonna, you know, it's gonna do its thing and probably continue down. So, like, let's start stacking orders. I'm not saying this is healthy, but you know, I've seen it play out before. So I'm gonna put it above the current 30 minutes candles high, and you know, actually, you know, 5% is enough. Let's see what happens. So yeah. Yeah. So all right. So at this point, like yeah. All right. So let me see. 15-minute candle. All right. So yeah, you see how this 15-minute candle, it kind of it formed bullish. At that point, I would close 50% of my trade. But right now we're in profit.
Mm-hmm.
So I mean, either way. Oh, sorry. Either way, I kind of want to move. Like, I kind of want to close 50%. Because it's not moving as fast as I wanted it to move, right? Okay. So me closing 50%, now I'm not risking 5%. I'm risking 2%, and that's if this stop loss gets hit. That's how we keep our losers small, right? So the time now, it's 8:30, and I usually get off the charts around like 9 o'clock. But since this is still playing out, and all right, there we go. All right, that looks good. That looks good. But I'm kind of targeting, like I said, I'm targeting like this area right here, and now it's rinsing back up. So yeah, I mean it's around. Yeah, at this time it's 9 o'clock. I would probably close my trade, but for the sake of you know, it's still respecting the 38.2. So I kind of want to see how this plays out. And we're not gonna mess with our stop loss here.
Yeah.
Me, I don't take any trades after 9 o'clock. But
really,
right now it's 9:11. There's usually volume in the market until around like 11 a.m. So if you wanted to, you could take trades after 9. I'm just saying, like, me personally, like, I don't like to look for trades after 9. And plus, on top of that, like, I'm trading from 3 to 9, 5 days a week. So that's like kind of like a full-time job already. I don't want to worry myself more with, you know, trading more hours of the day. But this still looks perfectly fine. As a matter of fact, if this candle's low gets broken, I'll put that 2.5% back into play, because I mean, yeah, like this is perfectly fine. So we'll put 2.5% back into the market and put it 17 pips away, yeah. But we'll close that order real quick. But yeah, I mean, it should start pushing down. I mean, I probably shouldn't have put the stop loss that honestly, I shouldn't have put the stop loss that close. I should have put it back up here. But I mean, I feel like this would play out anyways. That wasn't a great trade. That's why I don't trade after yeah, it's probably the stop's probably gonna get hit on that one. And you can see we're negative 1.4% if we were to close out everything right now. But that's why I don't trade like after 9 o'clock. But like I said, like that, yeah, this 38.2 is still being respected. So this still should play out. Like at this time I'd probably skip to the next day. I mean, it's a Monday, but yeah, I mean it should play out nonetheless. And because we already lost some profits off of that dumb trade, that was an impulse entry. You see how impulse entries kind of
mess you up.
Mess you up, even if you have the right idea, right? So I'm not gonna close partial profits here just because, like, I mean, we'll see what happens. But I have an idea that, you know, price is gonna continue to go down because it's respecting the 38.2. When the 38.2 is respected, that means that there should be more continuation. It shouldn't just respect the previous low. It should continue to go down. So, I mean, all right. I mean, kind of like at this level, I mean, I'm trying to think realistically. It's already 10:20 in the morning. I'm definitely not looking at the charts and monitoring it. So, I mean, let's just check back every hour. Let's just act like that's what we're doing. So, all right. So there you go. So this is 11 o'clock in the morning, right? So let's say we're checking back every hour. This is 11 o'clock, and that's what just happened. So now what we can do, like, all right, price is way up there. You can see, look at our equity curve. We're up 7%. So what I would do is, and like I said, we had this idea because if it's respecting the 38.2, that means you can see strong continuation. And like I said, the markets usually move, like, for the most part until like 11:30, because that's when London is closing, around 11:30, right? So there's like that New York and London overlap between 8 o'clock and 11:30.
Okay.
So we're gonna close partials. This time I'm gonna learn a lesson. Let's close like more than 50% this time. That way we actually, if our stop loss does get hit, then we're not losing out on profits, right? So this is some good profits. So we'll just keep that there. And then I'm not looking at the chart for the rest of the day. I'm just going to the next day, right? So I have a runner. And even though, like, me personally, I'm a scalper, this is how you can catch big moves sometimes, by just letting a runner run and do the dirty work for you, right? So, all right, here we are. This is the next day. This is pre-London. And this is a Tuesday, so we're gonna risk more than usual, but we'll stay to that like 5%, right? So the previous daily closed bearish, which is good to see. You can see that if we come over here, you know, the H4 is bearish, and right now this could be a top wick for the current H4 to continue moving down. Right. So now if we go down to the H1, we'll continue that idea by drawing this here. This is our support that might get retested as resistance. This right here. That Monday took a little longer than I expected.
Right.
But
I have like a good understanding of what you're doing. I just need I want to go pay attention to like the candlestick patterns just a tad bit, just so I can make sure I have great clarification on it. Not even to like study it and remember like the different like the one white soldier or
I mean, those candlestick patterns, they're definitely valid, but I would say more so than that, study price action, which people say, oh, candlestick patterns are price action. No, man, price action is the way the candle is moving and what the candle does. So like I said, price action is like, for instance, when the candle comes up first before it makes a bottom wick, and then it starts coming down. That's price action. That's how you know, like, all right, the candle is it's forming liquidity to push back down. Like, you can have that idea. That's price action. I think price action is the number one thing over anything else. Now, like I say, you can study those what do you call it? Like those formations, but what's more important than that is definitely, like I would say, study price action and just the way that candles move, not how they close. You see, you can't, like, even though, like, you know, price action, you can see that this is a small candle, then it got bigger, then it got bigger, and you can ask yourself why and look at like the time and, you know, look at what's their news, stuff like that. Like, that's how you can study price action when it's already printed. But when you're looking at price action on a candle that's open, that's how you're going to learn the fastest. Why is this candle moving like that? How does the candle move? Because when you're in it, like when you're live trading and you're looking at a live candle, you'll see that same intricacies of, oh yeah, price goes up before it starts coming down on a candle, or oh yeah, like, you know, big pushes that happen out of nowhere. Those are usually going to be wicks that you know, just turn into the opposite direction. Like, for instance, like, I mean, I don't, like, we kind of skip past this, but who knows how quick this downwards move happened, you know?
Right.
And then people got sold here and then started rinsing up, and like, people started selling here because they saw such another big candle, and it started rinsing up, and then they lost their money, and then it started coming back down to their position, right? And then what happens when that happens? A lot of traders are like, oh man, like, now price is where I was at before. So what do? They take another sell, right? And then the time that they're selling is no volume in the market, so that's the typical bad trader. And what do? They lose more money.
Right. That's basically what's happening out here to people.
Yeah, I mean, it just takes time. Like, it's not like you're doing anything wrong. You just have to make sure whenever you take a loss, like, you try and understand, how could I have taken the winning trade, or like, why? Just always ask why. That's the most important question. But let me see here. So yeah, we're in London Open is about to happen here, and that's at, like I said, that's at 10. So you can see this 30-minute candle. Let me fix these zones real quick. Hold up. I don't know what this zone is right here. This is why I like trading views so much better. Oh, that's a valid zone though, I'm not gonna lie. Yeah, looking at it like right here, this is pretty valid zone. Even though like this is like our minor time frame zone. So we'll keep it on the chart. But yeah, we're kind of inside of that zone right now. So I'm not doing anything until there's a breakout. And once again, I mean, oh my gosh, this is gonna be a nice week. What do we see here? Now, I'm not talking about what do we see here, but what do we see if you're pricing, you're looking left, and this is like a brick wall, and you can't see what's behind it, it's clean price action.
Okay.
Very clean. Imagine it like a brick wall, you know?
Right.
What's the last thing that price did in this area? That's what you have to look at. It's a clean move up. So what can you expect? A clean move down. So that was a really bad arrow, but anyways, we'll see what happens. We will see what happens here. So yeah, this candle's about to close. It's still kind of like respecting this minor support. And look, this is great, man. We're 20 seconds into the candle. And I mean, I know on these moves, like 4 pips is nothing, but well, actually it's like 7 pips, and it already rinsed up 7 pips. So that's a good sign that this is collecting liquidity in order to push down. It just if we had the selling idea. Now, if it flips down right here, like, all right, if it starts to turn bearish, yeah, I'm taking a trade, man. We'll risk that same 5% because this is London Open and we expect a lot of volume in the market. And you know, like I would want to see this candle's low be broken, right? So let's say, all right, that's a 32 pip stop loss. I'm gonna put you know about stop orders, right?
No.
Okay, so what I'm gonna do here is I'm saying to the market, hey market, if price comes to this level, execute me on a buy or a sell. In this case, I'm gonna do a sell because that's my bias. And then you can put like wherever you want your stop loss to be, and you know, once price gets to that level, that's when you're in on the trade, right? So you see this green line? I'm not in the market right now. Even though I placed my trade, I'm not actually in the market until price gets to that level. And you can see still, like, this is why holding a runner, and I completely forgot about that motherfucker. But you see we're 124 pips in profit on our runner, and price is still coming down. So let me actually modify my stop loss here and bring it below this, like, you know, above previous support that could be retested as resistance, which it already has retested with this candle right here, right?
Right.
So now we're moving our stop loss from break even into profits because it's the next day we woke up and analyzed what happened in the markets and we didn't get stopped out, which happens, I would say, around like 20% of the time. But the times that it does happen, man, it's fucking worth it. It's fucking worth it because we closed half of our position right here, right? And we got like what, 7%, and then we went to bed. We slept the whole day. We fucking went out on a yacht or whatever. Imagine yourself for 5 years, whatever you want to do, and you made 3% doing nothing. So It's really good. So yeah, this is where the market. You see now it's broken the low, and there's a good chance that it's gonna bust out. Now, the reason why I put my sell stop a little bit below is because, see, I don't want to get caught in this little area right here. But, yeah, there's a good chance that it should start going out. And you see, we just got executed, and right when we got executed, price just started flying.
Right.
So this is great. This is probably gonna be another easy day. And you see my stop loss. My stop loss is 34 pips. So I'm not gonna take partial profits until I get to 34 pips. Now, obviously, I'm not saying that's the go-to, but I have a clean range over here on the left. Now, if there was like a support that was like 20 pips away, then all right, I'll take 50% at 20 pips and put my stop loss to break even. But there's nothing in the way right now, so I'm keeping my stop loss open, and I'm waiting for 34 pips in order for me to put my stop loss at break even. So we're about 20 pips in profit.
That's crazy.
And this candle is about to close. So there, you see how it has no wick at the bottom?
Yeah, that's a reversal.
So now I'm closing 50%. Because I don't like when candles have no wick at the bottom. So I'm capturing profits just in case. And now if price goes to 34 pips in profit, then I'm going to wait. Well, actually, let me reiterate. Yeah, so so now price is at about 34 pips in profit. So I'm gonna put my stop loss at break even. That's what I was trying to say.
Okay.
But now I'm looking to the left, and you see right here, like we're kind of like coming towards the end of this big candle right here, and then we're coming into the small candles down here.
Right.
So, I mean, we could hold. Like we honestly could, but like right here, I would probably take some more partial profits, you know. Like I'm chilling. And then I'm moving my stop loss. I'm moving it above this current candle's top wick.
Right.
Because once this candle closes, I expect the next candle to respect that high. And if it doesn't, then I want to get out of the markets, because then I'm going to assume that price is now coming back up. And if you look at our equity curve, we made $170 if we were to close everything right now, and we're up about 16%.
That's good. It's definitely good.
So one thing to know about trading on demo, you see this candle is like it's turning bullish, which I mean, I just honestly, if I'm looking at it from the hour chart, it looks fine, but we're most likely going to get stopped out. So I'd probably move, like, this is a rare occasion, but I'd probably move my stop loss back to break even.
Makes sense.
Just to give price a little bit of wiggle room to like kind of come up a little bit and then come back down a lot. But I mean, there's a chance that even up here we could get stopped out, but we'll see. And the candle closed bearish anyway, so that's a good sign. So yeah, I don't know. I thought I was saying something before this, but I honestly forgot, bro.
Yo, it's like 2:15, 2:20, bro. I didn't expect to be even this tired. I just realized how tired I was. It's like
I feel you, bro. Hey, yeah, that's good. I'm gonna record. I had this recorded for Jay, but I'm gonna send it to both of you guys, and let's just close out these trades here. But that was just 2 days of trading, and you can see like we made about 17%.
Nah,
so it's pretty nice.
Nah, definitely. That's crazy. 17% on 1,000. That's definitely growing an account.
Yeah, and if it probably would have been more than that if we weren't just risking 1% on that first trade.
Right.
But but yeah, I mean, the thing about I'll just say one last point. I think that's what I was saying before this. One last point before you go. The thing about small accounts, you can risk high if you have a trading plan and something that you've seen work over and over and over on one specific pair. So that's going to get you confidence. And you with that confidence, you can kind of over risk in a sense. You know what I'm saying? So that's the beauty in like small accounts when you're first starting out. You could flip those motherfuckers if you take the time on demo and practice, you know, your discipline and like, you know, when price is in a range, like when it's real time in a range, you know, like up here, what we waited for,
Right.
this whole thing, waiting through this instead of saying, oh man, like this little bullish candle, oh, take a buy. Oh, no, take a sell. Like, no. And then probably getting caught on the opposite end of that stuff. Like just waiting for things to play out and make sense and repeat that over and over and over. Yeah, man, you could definitely compound like those small accounts really quick. So obviously like with over risking. But then like what your plan is if you're gonna do that is over risk at first and like get to like that comfy level, like whatever, like let's say like right now, like we're making, if we went this whole week, let's say we made like 30% for the week, right? That's crazy good. Like that's like for me, that's a really, really, really good month making 30%. So making that in a week is really good, but at the same time, you can lose that same amount in a week if you're to keep doing that. So just staying disciplined, getting your account, your equity to a level where, okay, what's 5% of that, right? What's 5% of this, and what can that pay for me? Can 5% of this money right here, whatever is in your account, whatever you keep compounding it to grow to, can that pay my, I don't know, fucking gas for the month? Can that pay my rent? Can that pay my health insurance? Like make it substitute something, you know? Make it take something off your chest and make trading a hobby and keep compounding that account until you can actually, like for instance, at first it's going to pay for your gas. You know, make it pay for your gas for the month. And then like what's 5% going to pay? Okay, make that 5% pay like your gas and your car payment or whatever the fuck you got going on. You know what I'm saying? Like your health insurance. Like slowly make it pay for more things and keep compounding your account, but slowly hold back on the risk, like 5%, 10% risk, slowly ease off of that and like go back into like 4-3% when your equity is at a good amount where like you're paying all your bills with just 5%. And you can make that withdrawal and continue to compound your account.
Right.
Yeah, that makes sense?
No, that makes a lot of sense. Actually,